racket number one, the Opendoor co-founder slams.
Wait, say his name.
Slams Keith Rabois.
We had to watch a few videos to say his name right.
Yeah, just to
Full
make
disclosure.
sure. Just to make sure. Slams Zillow, calls the portal's tech horrible. He said a whole bunch of other things. If you go check out the Twitter feed, which I would absolutely do because it's hilarious. Go through all of his Twitter.
It's interesting because I guarantee you, like 6 months ago, 8 months ago, he was probably shitting his pants over all this.
Well, 12 months ago they stopped iBuying. Well,
during the pandemic.
During the pandemic, they stopped iBuying, and now they're really
but I'm sure again Zillow was gobbling. I bet you he was shitting his pants. Well, but now he's doing the happy dance over the grave. You know,
they bought. I'll tell you what they bought. So they've been doing this since 2014. Listen, if you go watch some of the videos, and you can find one of the videos on Keith's Twitter feed, they are unapologetic about trying to end your business, real estate agents. Opendoor, everybody thinks Zillow's after them. Opendoor wants to cut your heart out and eat it in front of you. And they are unapologetic about saying
They say that?
They don't say it quite like that.
That's how you feel, though? You feel like they've gobbled your heart?
They want to reach inside
what is that? That's
of your chest and eat your
Indiana
heart.
Jones. That one's my favorite one. Yes. And he's like...
They don't give a crap about real estate professionals.
Right.
They say people that have bought and sold have been mistreated, and we're here to save the day. I mean, the video...
Ooh, I bet you that's going to turn black and white, huh, Bobby?
Is so... all right. All right. In Q2, they purchased 8,494 homes. So they're out purchasing Zillow, because we know Zillow they're sitting on 7,000 homes.
Right.
In one quarter, they purchased over 8,000 homes. But let's just get into...
This is their main gig, though. Like, this is Opendoor's thing.
It's their main gig, but they're showing signs of becoming more traditional. Listen, when the market wasn't good, they didn't make any money, okay? In 2019, they were less than 1% profit margin. Now, they have a better profit margin now, but in 2020, they didn't have a profit margin. And this past year, we're talking... Now, the earnings...
Is this all in the article linked up?
This is not in the article, but if you just go to investor.opendoor.com, you can look at the earnings report. They have a new earnings report. We're recording this on November 10th. On November 11th, they have a new earnings report. Wednesday, November 11th. So this video will be up before then. I'll probably react to the earnings report at some point.
Okay.
But, this is all before the earnings report.
Today's actually the 9th. Right.
Oh, the 9th?
Today's the 9th.
So the earnings report is the 10th. So the earnings report is the 10th,
I was going to say, I'm like, wait a minute. Veterans Day is Thursday.
Is that how you base everything?
Well, my children are off of school, so it's, roadblocks in my brain.
I think it's the 10th. I think it's Wednesday.
So
Anyways,
Wednesday the 10th.
They had a gross margin of about 13% last quarter. That's pretty good.
Yep.
On average, they've been anywhere between 5 and 6% over the long haul. Less than 1% 2019, just over 1% in 2020, and now all the way up to about...
Well, I mean, obviously
13%.
The inventory shortage is certainly helping them.
Let's just get into a little bit of because I really want to talk about the beef here.
Let's do it.
Rabois said it on Twitter that he expects Zillow to suffer even greater losses than they admit. So our boy, Chris Smith, who's been on a Real Word confessional, you should go check out that video. He writes, Opendoor is worth $12.5 billion. This is in a tweet. We'll put it up. Yep. Zillow is worth $16.5 billion, but Zillow had a 10-year head start. Now, Zillow at one point this year was worth $50 billion because we're going off of their stock price. So they were, when they crossed over 200 a share, they were at $50 billion. Now they're down to 16.5 after everything that's happened. It's possible that the number one iBuyer will soon overtake the number one home search portal in market cap. Don't think Big Z bowing out means iBuying is going away. So Keith, basically, one of the things so he wants
to salt the wound, and my conviction is that Zillow will have an even worse.
Yeah, he's saying Zillow it'll be even worse, and he also tweets back next Wednesday. So it is tomorrow. It's Wednesday, the 10th, with a smiley face. Somebody writes, as a public company, is it okay to make this statement? He writes, yes. He's a co-founder. He's not the CEO right now. That's Eric Wu. But he is basically...
He was loving this day. Just like you were, like the appraiser day. He probably didn't... He probably never even got out of his PJs that day.
Doing a touchdown.
Sitting there.
This is the video I talk about. The video for Opendoor Complete speaks for itself. And if you want to go just throw up in your mouth and you're a real estate professional, go watch that video.
That doesn't sound appealing to me.
So then don't watch the video.
Okay.
All right. So he's a little crazy. Go check out his current his Twitter feed. But he's basically saying, hey, Wednesday, our stock is going to go through the roof, and we are going to surpass.
We're going to stick it to the Z.
Zillow. Now we're sitting here on the day before the earnings report.
Mm-hmm.
Now, when he came out with these tweets, the stock did pop that day. Now, it's down almost 5% today.
Are you an Opendoor investor?
I am not. Okay. Just for full
disclosure, I just need to know.
I'm going to do my research between now and the earnings report. Maybe, I don't know, maybe I buy between now and then. I don't know. Who knows? If I can make a buck, why not? I don't know. We'll see. Probably not, but we'll see. At one point this year, they hit $34.59. They've been as low as $14.17. They hit $25, so they went up about 19% after his comments, and then they dropped right back down to where they've been at, which is about $21 as of this second of recording. Okay, so I don't know where they're going to end up today. I don't know what they're going to do as they lead up to the earnings report tomorrow, but that's where they've been at. And he's predicting that they're going to surpass Zillow. He says a whole bunch in here. He says if you read our SPAC filings... It sounds like that's
pretty true to character, though. He does speak his mind.
Oh, yeah.
Yeah.
Yeah, if you read his Twitter, you'll...
So this isn't out of character. This is just the normal tweeting.
If you read our SPAC filings, we explained how our algorithms actually work versus Zillow's, which are horrible. This was filed a year ago. So he is basically saying, this is the big thing. Zillow, in their earnings report, said we weren't able to predict the value of these homes going forward with certainty, which led to us stopping our iBuying.
Yep.
Now, the minute the pandemic hit in March of 2020, Opendoor shut operations down immediately on iBuying.
Right.
So when any uncertainty came to the market, they weren't able to predict either. Now, they've been able to predict right now in a bull market. Now, but remember, in 2019, 2020, they were making no money off of these flips.
Yeah.
Now they're making 13%, and it's their real only
generator
of revenue.
Inventory is so low.
Right.
All the things they bought back then, they're able to probably sell them without even having to really probably do much.
Now Zillow is listing homes below what they paid for it.
Right.
On average, Opendoor is listing homes for between $4,000 and $5,000 above their purchase price, but they have fees baked in. If you go on their Opendoor's website, they're like, we save you money. It's 5% to sell the house on the Opendoor Complete. When we sell your house, it's 5% when most traditional brokers are at 6%.
Oh, so they're saving them 1%.
Oh, yeah. They said thousands in the 1%. They're such good people. They're really looking out for consumers. Listen, Opendoor. Listen, Rabois.
Keith.
What we know with what just happened to Zillow is that you don't know local markets better than agents. You can beat your chest right now in a bull market and you're 13%, and maybe your earnings tomorrow is going to show that you're up 15%. But when we know something happens in the market like it did in March 2020, you're going to put your tail between your legs and you're going to run into a hole just like you did then. And that's going to continue to happen because you don't know the local market better than real estate professionals. And people that need help, your video that I'm referring to, let's put up a little clip.
Each year, millions of homeowners find out the hard way that real estate is broken. Selling and buying are treated as separate transactions, forcing people to juggle the complexities of their move.
This is the most pathetic example of ignorant people thinking that they know better than local real estate professionals.
Now I got to watch it.
You got to watch it. It's unbelievable. And this is going to come back. These tweets are going to come back to haunt you. I guarantee Rich Barton is coming for you. I know you're coming for real estate agents, so you don't really care, and you're certainly not going to... I hope you respond to me on Twitter, Keith, because I'd love to go tit for tat or even a live debate with you at any moment, these tweets are going to come back to haunt you. You're going to be fine. You may surpass Zillow's market cap this week, but it's a long, long game. Okay?
You've been dreaming about this, huh?
I haven't been dreaming about it.
You've been waiting for this convo.
He goes on at the very end of this article, this Inman article, which we'll link up. Selling or shorting Opendoor due to Zillow's flaws, this is a tweet, is akin to shorting Google due to Yahoo's inability to monetize search well or return long tail queries properly. So he's basically saying we're Google.
He is calling himself Google.
You're
and
Yahoo.
You are Yahoo.
Yeah.
Wow.
Now here's the thing though, Keith. Here's the thing to remember. Everybody in the world searches for information. Not everybody sells their home to a house flipper. They never have, and they never will. The majority of sellers are going to sell their home on the open market. Not to a home flipper for convenience with high fees, but to the open market and the person that can bring them the most value for their largest asset they're probably ever going to carry in your life. So your analogy doesn't make any sense. And these tweets are going to come back to haunt you. You are, my friend, the biggest racket of the week. Hey guys, if you enjoyed this short clip from The Real Word, click here for another one.
Or if you like the full episode, click here.